Hey everybody, Preston Brent here with our weekly roundup. This is for the trading week ending July 31st, 2015. So we round out one of the hotter days of the summer, the month of July. Really wasn't that powerful of a month. What I've got on the screen here is the daily chart of the E-mini S&P 500 futures. But the first thing I want to go into before we jump into the futures is I want to show you a real interesting chart here. I've got a couple I want to show you. This first one right here is a chart that I got off one of the systems that I use, stockcharts.com. Some of you may have heard of it. Very good system, by the way. Um, I'm looking at S&P 500 stocks, the percent over the 20 EMA. And as you can see down here, as the S&P really, and this goes back to pretty much the beginning of 2014, you can see we've had this steady rise here with the E-minis. But then the other thing that's alarming is that we kind of topped out and then we started this dramatic fall off in the percent of stocks over the 20 EMA, exponential moving average. So that basically shows this major divergence and lack of participation as the E-mini futures have been moving up. That's not really a good sign. And we need to take out this high right here as a percent of stocks to be able to erase this and get better participation out of stocks in the S&P 500. Now, this is of the 20 EMA. The other one I want to show you are the stocks that make up the 50 EMA. And if we look at those, and let me just clear the screen here for a second. Let's just get all that out so it kind of clear up for you. And let me enlarge it just a little bit so that you can see a little bit better on my screen. Here are the percent of stocks over the 50 EMA. Again, even worse, you can see right here, we've got this dramatic divergence in price as we're making highs, and we really, for the year, we haven't been able to broach this area here. So we've been in this tight band right here for most of 2015, but we've been giving it up here as far as the percentage of stocks in the S&P 500 over their 50 EMA. Again, very, very poor participation. Doesn't look very good, right? Now, the other thing I wanted to show you was the, let's go take a look at the New York Stock Exchange. And this one right here, again, it's equally bad. You can see right here as I blow it up, percentage of stocks over the 50 EMA. You can see here this dark blue line are those percentage of stocks over the and this instead of the EMA, this is a simple moving average. But you can see this big divergence. I mean, it really is dramatic, folks, as we made a high here and then we came up and we did a double tap there. But, you know, from that high right here to high, just dramatic divergence here in the percentage of stocks that are participating in this rally. Now, that is not a good sign. That's what when you hear some analysts talk about a lack of breadth in the market, that's what they mean. We need participation in stocks. And then the other one that I wanted to show you, just a couple of other quick ones, and we'll go take a look at the E-mini S&P 500 futures, is NASDAQ. If we look at NASDAQ percent of stocks over the 50 EMA, let's blow it up. Again, NASDAQ is one of the leading indexes for the year. And if we look at NASDAQ, again, we've got this lack of participation, and NASDAQ is one of the stronger indexes here in the US. And you can see here this big divergence between these two. And this up here just shows a lack of participation as we're making higher highs. In fact, on this chart right here, we made close to all-time highs in NASDAQ, and it coincided right here. And again, there is absolutely no participation as far as those stocks, and this is NASDAQ 100, which would be the 100 largest stocks in the NASDAQ that are over the 50 EMA. That is not a good sign. We are going in the wrong direction, folks. No participation. And then one other final chart I do want to show you here, and this is the advanced decline line of NASDAQ. And this is a cumulative to make it work. But this is those stocks advancing versus those stocks, or I'm sorry, those stocks that are new highs versus those stocks that are new lows, and it's a cumulative chart. And you can see the last time we had a cross here in this 50 EMA, it preceded a pretty big drop. And then about a month later, here we were. So now we got another drop right here. And now the question is, are we going to give it up in NASDAQ? Okay, now remember, NASDAQ is the leading index or outperforming all other indexes. So is this a suggestion that over the next 30 days, we're going to get the NASDAQ's going to give it up, and then if the NASDAQ gives it up, everybody else is going to give it up? Not really sure. So that is kind of where we're sitting right now in these markets. And I wanted to put that out there because I've been pointing this out to our members for at least 3 or 4 weeks that we've got to be careful here with these markets. Now, if we look at this index right here, this is the S&P 500. You can see the weight today could be considered more a day for the bears than the bulls. And the reason why is if we come in here, let's just come in a 30-minute chart just to really zoom in for the day. You can see right here that looking at the day here, and we come into the morning, you know, when we got this report out, the employment index, and then it just kind of really everything after that report came out here in U.S. Employment index and cost, it was really everything went downhill from there. But you can see here how we went up, and then the bears socked it down. So we did an ABC. This is also a classic 3, 4, 5 pattern right here, and then we kind of got our win, moved up a little bit, and then we kind of closed off a little bit as we went into over 9 hours going into the weekend. But again, this is a win for the bears on Friday, and then the prior day we didn't really go much of anywhere, and then towards the end of the day we kind of sold off. Okay, so it's not been a very what I would call a very solid week here. So if we come back to the daily chart, what I'm going to do here is just take everything off the screen here, at least some of the major indicators off the screen, and I just want to show you here. And if we back it out again, I'm going to show you this chart again. You can see this green line down here. That is a key support point for a very short-term, very bullish rising Fibonacci. So, and I'm using 0.23. So let me just put it out on a monthly just so that you can see what I'm talking about here. Here's a monthly chart, and I'm going back to the lows made March 9th, 2009, and then we've just been in a tear going up the hill here. You can see from that low right there, you know, we're springing up very, very solid here. And then it's just been in 2015 that we've been in this very tight range, okay? But outside of 2015, because this is the dividing line between 2015 and then 2014 and then 2013, you can see, and then 2012, I'm just going to divide these out and kind of show you guys here. So you can see right here, that's 14, this is 2013, 12, and 11. Really in 11, we had difficulty and we kind of formed a touch point of an upsloping trend line. You got to have 2 touches to make a trend line valid, okay? So that would be the second touch off of that pivot low there. And then we started to catch some wind in 2012, but it really wasn't until 2013 that we really started that very rapid ascent right there, okay? And we're just about breaking it right now. So 2013, 2014, we've had this big run up, and we just cannot get north of this price right here. We're just having a difficult time. Now, I put this Fibonacci on here so that you can see off the highs here on the E-minis, 2134, a good solid pullback would be right down to the 0.236 area. That's 1789. I talked about it last week. I'm going to talk about it again. And we pull back there. I think you'll see a lot of people come in with longs. And I think a lot of people that want to deploy new money is actually waiting for a little bit of a pullback. You can see right there at the 38%, which by the way is a normal fib node, is a normal pullback where the trend would continue to the upside. So that suggests we've got a long way to go to the downside, and this would suggest a further downside risk than a very small upside risk. And this is going out in time, probably the next year and a half or two. And that would be, looking at it, somewhere like this. So that would be 15, and then this would be 16, and this would be 17. So somewhere in this area right here, the odds dramatically favor a pullback to that 1790 area. Now, no one, if I knew exactly the day or the week, I would be jumping all over shorts like crazy. No one knows, but we're getting some indications, as I showed you before, that lack of participation. By the way, we had those same type of indicators back over here in 07 as well. Lack of participation, lack of breadth, and it gave us a little bit of a heads up warning that we were going to get a pretty good down move, but no one expected the severity of that move right there. Okay, but no one expects it, and that's why, because they don't expect it, that's what drives the market lower, and then you create panic selling, and then you get more selling, which generates even more selling. So if we come back in and we take a look at the weekly here, you can see right here on this, and this is a 50 EMA on the weekly, so this would be a 50-week EMA, right? And we really, we've only broached it just a couple of times since 2012. 2011, as I said, was a bad year. 12, we started a move, and then since 2012, we haven't closed a week below it. We've gone intra-week below it, as you can see right here, but we were able to get back up above it. And you can see right here, we touched it, and we're just sitting right in that area right there. In 2015, just so that you know, the separator is right there, and we've had a lot of tries at that number, and we can't top it at that area right there. We just cannot top it, and I do believe that this is a common touch point. Now, to get down to this area right here, we got to clear a major area right there, which is sitting right around call it 1970. Okay. And that would be a really key area before we would break it and then come down and challenge that 2014 October low, which moved down dramatically. So this is where we're sitting right now. The other thing I wanted to show you is, again, look at the bearish divergence in the MACD on this weekly chart. Again, this is suggesting that the coming weakness may not happen next week, because you remember, this is a weekly chart, so that's just one bar. But it could take a series of 6 months, because this is all of 2015 right here. We could go all the way out to the end of the year, right out in this area here, to see ourselves down. So that would suggest going into the fall time. Traditionally, fall is a very solid period for the markets, but we may see a different type of market for the fall this time. Now, we're going to play it a bar at a time, but the odds seem to be pushing the market this way. All right, and then if we come back into the daily, you're going to see again this daily chart, and just looking at it, it is a very, and if I were to put a regression line on it like this from the peak to where we are right now, you can see there's no doubt on this regression line the direction this regression line is going. Okay, it is going to the downside. And you can just see that right here. Now, I didn't use a regression line when I drew my channels for our members, but our channels, kind of look like that. And I'm not drawing them exactly right, but kind of like that. So it fits a little bit better than the regression line. We went out just a little bit, but we didn't quite top it. 200 EMA held. We were only below the 200 EMA for just 2 days. These are just intraday movement below, but then it got back up above the 200 EMA, which is that yellow line. Okay, and this is where we're sitting right here, just above the 50 EMA, but inside that channel. And again, it's a very, it's a little bit deceiving. You can also see here, this was a key little pivot high there because it took out that prior pivot high. Before that, we were doing pivot highs and lower pivot highs, lows, and lower pivot lows, right? So the odds favor a little bit more of the same, but a little bit more of a bearish action here. And we're about halfway through earnings, maybe a little bit more than halfway through, and earnings are driving the markets a little bit. We can also see some activity in the bond market, and the bond market is suggesting there's more underlying fear than people would think. Now, if I put my indicators back on here, now you can see a lot of action here. You can see my downsloping channel. And I was telling our members that we got a huge S1 area. That would be our first level of our R1 area, first level of resistance. We're having a hard time getting up and clearing this area on a daily chart. And that would be from about 2107 to 2104. And then that puts us right back into this support zone right here. This would be our S1 zone, which runs from about 2088 down to about 2078, roughly, right in that area there. So we've got a tight R1 zone, which would be our resistance, first level of resistance, and our first level of support. So it's relatively tight. Okay, we got to see one of these that would break. The odds tend to favor a break to the downside. This blue line right here is the opening price of the E-mini S&P 500 for the year. You can see the 200 EMA and the opening price pretty much stopped dead in the tracks, this fast down move. We got some buyers participating, and now we're having a hard time clearing this area here because the earnings, quite frankly, we're not getting enough companies that can support the breadth of the market, which means all of these highs are being made on very few stocks. And eventually, unless we get participation, folks, we're rolling over. So that is pretty much the main message that I want to send tonight, is that we need more participation in the markets. The other one that I wanted to show you is the Dow. The Dow's been the weakest for the year. And if we look at the Dow with all my indicators on here, you can see the Dow is still red for the year. There's the blue dashed line. That's the opening price of the Dow Jones futures. You can see we had this little bit of a double tap here. So we did this test right here off a low and a low here. We had bullish divergence. So I was suggesting for those that are day trading, take it long. We'll probably run up to resistance here. And then we got a moment of truth, right? And that moment of truth is, are we going to break through or are we going to roll back over again? You can see we've got downward trajectory on the 50 EMA. We got a flat trajectory on the 200 EMA. And should we keep going in this sideways to slightly bearish position, we're going to get a cross in the 50 and the 200. And it's been a long time since we've had a cross in the 50 and the 200 EMA out. And that would be, and a lot of technicians call it the death cross, but that would set off a lot of sell programs and a lot of these black boxes that are being run out there now. And it would generate a lot of attention and it would generate a lot of press, which would then cause more people to sell. And that's where we're sitting now in the Dow. But the other thing that's made the Dow relatively weak too is the Dow Jones Transports. If you look at Dow Jones Transports, we actually had a break of this downsloping trend line. So that was a little bit of a positive news, right? That's a break, and this is key. We've been in this downsloping move here with the transports since March, and that gave us a little bit of a heads up that we're going to get ugly here. But then we finally had this break right here. I was projecting a price right around this area here for the transports. We came down, we didn't quite touch that low right there, had a little bit of bullish divergence, not an ideal bullish divergence pattern, but that's where it went. And now we're sitting here almost flat. And you could probably argue that this pattern right here is like a bull flag. I mean, you could just see the movement here like that, right? Where you would break to the upside. That would be where we would do. Now, if we do get a break to the upside and we take out the 200 EMA, that would be bullish for the transports. And then I would suggest, yeah, let's go look at the transports. But it's been weak since late March, and it's just been going down and down and down. So that's driven down the Dow or the diamonds. It's also driven down the materials sector. It's driven down the industrial sector, XLI, XLB, and it's just been very, very poor, okay? So, and this, by the way, is in addition to oil falling off the table. You would naturally think if oil is weaker, gas cheaper, that it would be positive. And within the Dow Jones transport sector, yeah, airlines have been doing better. They've been one of the better sectors in the transports, but the trucking, rail, and maritime has been very poor. And that would suggest shippers aren't shipping like they should be shipping. Say that 10 times fast. And if you don't throw a couple of cuss words out in that one, I'll give you a hot dog. All right, so anyway, that's kind of where we're sitting here right now with the transport. So these are just some of the things that we're looking at. Now, we've been short oil. We had another great opportunity. We've been short oil for a while, did really good. Got out of it, got stopped out as a couple of days ago, and then we took our profits, and then oil moved up, and I had suggested everybody, if it moves up, let's take some shorts again. We did, and it rolled back over again. So that's kind of where we're sitting on the oil market. And in the other one, the bond market, the bonds were very strong today. I mean, just extremely strong. And I'm looking at a near-term upside objective in the bonds, and this is suggesting that the markets are not as strong as they would, as other people would like to call it. Because you can see here, we're at this key fib level right here, and we got a key resistance point here. So I'm saying that roughly right around the 157.12 area would be a major resistance point. I don't know if we'll make it up there, but I'm putting on shorts up in this area here with bonds looking to come down here. If we do get this crater in the equity market, like the other charts are suggesting, bonds could bust up into this area here, but they're very overextended given the fact that the Feds have already publicly stated that they'll probably raise the rates 25 basis points this year. And that just means that more shorts will come in and start layering in here. Remember, in a normalized market, when you don't have a lot of central bank participation like we got right now, and this is the first time we've ever gone over 6 years with interest rates at zero, generally bonds move in the opposite direction as equities. Equities go down, bonds go up for the safety trade, risk off trade. Equities go up, bonds go down because money is seeking higher yield in equities. But you throw all this money into the market, and you got all the central banks, not only here in the U.S., but in Japan, and they don't have a central bank in China, but they manipulate the market there probably more so than anywhere else. And then you've got the ECB in Europe just flushing money into the system. It really makes some of these correlations between bonds and equities not as reliable as they've been before. So it becomes more of a technical trade than anything else. That's why we can actually have bonds get up into this area here and then roll over while equities also roll over. So that's the thing that we're going to be watching for in the bond market. And that's just kind of what I'm talking to our members about. Now, the other thing also is that we've had some big moves in the currency market with the dollar and the euro, and we've talked about these for our members. Same thing with the silver and the gold market. We've got some potentials there. Oil, I talked about being short right now, and we've got some strangles in oil also. And we had a nice play to the upside in the ag market with soybeans, and now we've got this big pullback. So we're going to be looking at some potential longs there again. And then just to wrap up this really quick session, we also had a little bit of a move up in volatility. If we look at the VIX, you can see the VIX actually finished, believe it or not, down just one tick. So the VIX, even though we moved up in volatility at the beginning of this week, right? You could see this almost like a TP, up and down like that. We're almost right back where we started from. We're at this point down here where the risk of a big pop is to the upside, not to the downside. Now, I said that exact same thing over here last weekend. If you recall, I said the risk is a pop to the upside. So are we going to get this same pop going into Monday? I'm not really sure, but Sunday night, For our members, we'll be going through some of our weekly market watch and some of the stocks that we're watching and some of the commodities that we're watching and some of our trades. So if you're not a member of our group, I'd highly encourage you to come on in and check us out. We're doing fairly good this year, like we did last year and the year before. So, and then if we just one other quick thing, if we look at our August volatility futures, you can see right here again. It fell into close, and this was the pop-up that we had early in the week. As I said right here, very minor one, and then boom, we're down here, okay? But that's how the volatility moves. So now we're at this low point right here. The risk of a big move is to the upside. So we got to be careful next week. We need to clear a couple of resistance points in the S&P 500 futures, which is the one that we really follow right at this point right here. So again, for all of our non-members and what you want to watch going into Monday, 2104 to 2107 is our R1 zone. That was our first level of resistance. And then 2088 down to 2078 is our S1 support zone. Okay. So again, I will see our members Sunday night. Everybody else, have a great weekend, and I will see you for our next weekly roundup for next weekend. If you're not a member, come on in and check us out. Otherwise, have a great day and a good weekend. Ciao, everyone.